Frost. Welcome to the Accountability Show, episode 30, right? 30, yes! 30 episodes. I can't believe it, actually. I think this is the longest I've ever stuck to one show in probably 2 years. So I'm actually pretty proud of myself. Pat on the back, pat on your back for being here. Turn on your notifications so that you know when an episode is going to drop. But thank you so much for tuning in the Accountability Show again. I really appreciate it, and I hope that this is helping you in your business because we're trying to teach you the 12 foundations, the 12 pillars, the 12 principles,
12 steps.
the 12 steps, there you go, of how to create a firm accounting foundation in your business. From financing packages to balance sheets, cash flow statements, budgeting, nobody likes to talk about that, and now we're talking about tax planning. Last episode we talked about what is tax planning. This episode is why do we do tax planning? The reason we do tax planning is this. There's a difference between tax avoidance and tax evasion. Tax planning is practicing tax avoidance. Nobody likes to pay taxes that they don't have to. I don't think that you want to. I know I don't want to. I want to use the code as much as possible to pay as least amount of taxes as possible. Because already, as business owners, we pay so many taxes. Now, when we're talking about tax planning, we're talking about annual taxes that are due, your individual and your business tax returns. Most businesses are flow-through entities now, so this is your individual tax return. That's where you end up paying your tax. Now, you're paying property taxes and gross receipt taxes and personal property taxes. You're paying sales taxes. You're paying property taxes on your residence and your business. And you're paying annual income taxes. You're probably paying state and local income taxes. You might even be paying a state tax just for the sake of having a business inside the state. So there are so many taxes that you have to pay, and so we want to practice tax avoidance, not evasion. Tax planning gives you a plan in order to save money on taxes that you don't need to unnecessarily pay so that you can invest in the future. See, at Croft, we believe in 4 principles of wealth creation. The first one is earning income over $10,000 a month. We believe that in order to grow wealth, you have to have an income of over 10 grand a month. The second principle is tax planning. Once you earn over $120,000 a year, then you have the need to plan for taxes because you have enough money that you are earning in which you can create savings through tax planning and then use that savings to then invest into tax-free accumulation of wealth. Tax-free accumulation of wealth. We want to pay taxes at our lowest tax rate possible so that then we can use that money to then invest into investments that are going to create a larger return, a tax-free return. So, why do we do tax planning? Because it's a part of your overall wealth creation. It's extremely important. The most wealthy individuals, successful individuals, the ones that keep the most money, pay the less tax. I mean, look at Donald Trump, for goodness sakes. He has a lot of money, supposedly. He has a lot of property, and he paid like $750 in tax. That's crazy. It's because he plans. He hires professionals, and he understands how the tax code works. So this tax code is the same playbook that everybody plays from, all the CPAs, all the professionals, all the attorneys, all the business owners play from this one playbook. But if you use one tax professional versus another, versus one circumstance versus another, you can come up with 3 different answers for the same situation. It's crazy. And when you can do that, then there's a different plan that you need to create. There is a possibility for planning in order to meet the criteria for you to pay as less taxes as possible. You want it to be as low as possible. But you need to pay tax. Paying tax means you made money. You just might not want to pay a 37% tax rate. You'd probably rather pay 13.5%. So how do you do that? Tax planning. You create a plan throughout the year if you know you have a big transaction. Let me give you an example. We had a client that sold their business here recently. They sold their business. They made $1.3 million. $1.3 million. They had to recognize $1 million of that gain this year. $1 million. They paid $132,000 in tax. That's about a 13.5% tax rate. That's big. 13.5%. Normally they would have had to at least pay 37%. How did they do that? We planned. We talked about the transaction throughout the whole year. We ended up finding what we call basis in the transaction. How do we find basis? Through facts and circumstances. Listen, why do you do tax planning? It's the same reason why you plan out a vacation. It's the same reason why you plan your wealth strategy. You want to have a plan each year so you know what to follow so you don't have any waste. I know whenever I go to Disney World with my family, my wife plans every single meal. She plans exactly what rides we're going to, when we're going to them. She plans our fast passes. We know that we have to be at certain locations at certain times in order to maximize our whole time while we're there. And we do it based off of where the crowds are, what time of day it is. The whole thing is planned. Let's face it, everything works better with a plan, and taxes are included. This isn't something that you can't participate in either. You have to participate as a business owner in your tax planning. You got to be there. You got to have information. You got to be able to answer questions, because the difference between the way you answer this question and that question is going to end up with a different answer in your taxes. That's the beauty of our tax code, and kind of the ugly part of our tax code. It's very subjective. There's a lot of interpretation. And as a lot of people talk about, there's a lot of gray area. That doesn't mean that it's bad. It doesn't mean that it's good. It just means that those who plan usually pay the least amount of tax, the least amount of tax. That's why you tax plan. You want to save money. Tax planning is the answer. Thanks for tuning in to the Accountability Show. I'm JD Frost. You can follow me on Instagram at jdfrost.today. And thank you for listening to the podcast. If you're listening on the podcast, the Daily Ledger podcast, give us a 5-star rating. Share it on social media. Share with your friends. This is where you learn practical knowledge about accounting. The Accountability Show. Thanks for tuning in.